Hello, welcome to the weekly technical analysis review for Tuesday, April the 2nd. I'm Rafik Jan, currency analyst at XM.com. The pairs we're going to be looking at for this week are the dollar yen, the dollar Swiss franc, and the euro pound. Let's start first with the dollar yen pair. Looking at the short-term picture, from the momentum indicators, we can see the RSI. It is in positive territory, but it is flatlining. And that flatlining can be explained by the fact that prices have met strong resistance at the 200-day moving average around 111.45. If that resistance level holds, we're likely to see prices reversing lower with strong support coming from the 23.6% Fibonacci level of the retracement of the up leg from 106.45 to 112.13. So that's around 110.80. So that level is also significant because it is near the 50-day moving average. Dropping below that key region would shift the near-term picture to bearish, and then we're likely to see the 110 handle coming into focus. That's the 38.2% Fibonacci, followed by the 50% Fibonacci, another key level, that's around 109.30. If though we do see dollar yen breaking above the 200-day moving average, there's likely to be another resistance level at that 2.5 months high of 112.13 from back in March. Breaking above that March top, though, would potentially signal a resumption of the uptrend that started back in January, and then it would also help shift the medium-term picture, which is currently neutral, to a more bullish one. Let's then turn to the dollar Swissy pair. We can see another key resistance level here that's capping prices at the moment. So that's around the parity level at 1. It's also where the 50-day moving average is. Looking at the momentum indicators, stochastics are clearly suggesting a strong upside momentum, but looking at the RSI, it is more or less flat around or starting to flatline around the 50 neutral level. So we really need to see the pair breaking above the parity level in order to shift to a more convincing bullish picture in the short term. If that happens, there's likely to be more resistance at the 1.003 level. That's the 23.6% Fibonacci retracement of the up leg from 0.9715 to 1.0123. And then above that, we've got the 1.0075 level. That's been a congested level in the past. That could be another hurdle on the upside before prices reach that 4 months high of 1.0123. That was the March top, and breaking above that March top would help strengthen the would rather help shift the medium-term picture, which is neutral to bullish, to a more convincing bullish one. If though prices are unable to break above the immediate resistance at the 1 level, they could slip back downwards, first at the 38.2% Fibonacci at 0.9970, followed by the 0.9920 level. That's the 50% Fibonacci, and is also near the 200-day moving average. So a key support level there around 0.9920. If broken, it would shift the short-term picture back to a bearish one, and then we could see the 61.8% Fibonacci at 0.9870 coming into focus. Finally, let's have a look at the euro-pound pair. So euro-pound has been trading sideways for the past 1.5 months or so. At the moment, there is immediate resistance coming from the 0.86 handle. That's near the 50% Fibonacci retracement of the up leg from 0.8474 to 0.8722. If prices do manage to break above the 50% Fibonacci, we could then see the 50-day moving average acting as resistance at 0.8644. Breaking above the 50-day moving average could help prices aim for the March top of 0.8722. It would also take the pair inside the Ichimoku cloud and would help shift the medium-term picture to a neutral one. At the moment, we can see prices have been trading below the Ichimoku cloud all the way back since the beginning of the year. However, in order to turn the medium-term picture to a positive one, we would need to see prices break above the top of the cloud and the 200-day moving average. So that region is around 0.8830. To the downside, there is immediate support at the 61.8% Fibonacci at 0.8567, and then we've got the 78.6% Fibonacci at 0.8525 before prices were to head back towards that 22-month low of 0.8474. If that low is breached, we could see a resumption of the medium-term downtrend. So that's it from me. Thank you very much for watching and have a great day.